Good morning, students. So far, we had covered basics of partnership and admission of a partner under the main heading reconstitution of firm. We saw case wherein A and B were partners sharing profits equally with the firm AB. They took a decision to introduce C into partnership, wherein A and B mutually agreed C's admission, and C was admitted for 1/3 share in partnership. That is a case of admission of a partner. Now, today the next subheading under the main heading reconstitution of firm is retirement of a partner. So when we hear the word retirement, we may think of retiring from a job at the age of 55 or 60, which we normally see in government service. Here, retirement means, suppose A, B and C were partners sharing profits or losses equally. On 31st March 2018, B expressed his desire to discontinue his affairs with the firm as he is planning to settle down at Germany with his son to take care of his grandchild. Suppose a partner expresses his desire to quit his affairs as a partner with the firm. That is the best example for retirement of a partner. This is a case of reconstitution of firm. So, the lesson retirement of a partner is easier provided if you are thorough with admission of a partner. The accounts to be prepared remains the same, that is revaluation account, columnar capital account, cash account and balance sheet. But the thing you will have to think is like this. When B retires on 31st March 2018, what was made till 28th February 2018 is eligible to be enjoyed by all, including C, because till yesterday C was there, his efforts were there, his sweat was there. So whatever is made by the firm, it is A, B and C who are eligible to enjoy. So, in admission, when we revalue assets and liabilities, we distribute revaluation profit amongst old partners because till yesterday only A and B were there in the picture. But in retirement, the same procedure we will do, but again when we reach at revaluation profit or loss, we will distribute it amongst A, B and C because this is a case of retirement. Till yesterday, C was also there in the picture. So, revaluation profit is to be distributed amongst all partners, ALL, all partners, including the retiring partner. In the case of columnar capital account, we will have to see. Finally, we will arrive at the closing balance after incorporating opening balance, general reserve, goodwill, revaluation profit, etc. etc. When you reach the fag end, we are about to reach the balance. You don't have balance for the retiring partner C. Instead, whatever is there in C's account, C is eligible to receive. That will be given to him either as cash or in installments by way of loan. Sometimes a combination method, little bit in cash and remaining by way of loan will be given to the retiring partner. So how is it? We will see now. So in the case of reconstitution of firm, that is retirement of an existing partner, other continuing partners gain their profit sharing ratio. So far A, B and C were there. They were sharing equally. So 1/3 is to 1/3 is to 1/3. Now C plans C plans to quit his affairs with the firm. Now A and B alone is there. So what happens? A and B will be sharing it in 1:1 ratio. So in the case of retirement, because of retirement, remaining partners or continuing partners will gain and is not sacrifice. Okay, gain their profit sharing ratio. Now retiring partner will be sent off with his share of capital, share of goodwill, profits, etc. All items he is eligible to receive. Retiring partner's capital account will be settled either by paying cash or transferring to his loan account, that is, he may be paid in installments. Now, learning areas in the lesson: you should know what is gaining ratio, how to treat goodwill, settlement by way of cash or loan account, full problems with capital adjustment. These are the things to be known. Now before proceeding, you should know what is gaining ratio. When sacrificing ratio is the difference between old ratio and new ratio, gaining ratio is the difference between new ratio and old ratio, because gaining ratio, the concept of gaining ratio, new ratio will be more. Okay. So that is how. Now there is luckily only one method of goodwill to be learnt in retirement, that is when goodwill of the firm is valued. That is, the goodwill of the firm is given. From that, trace out retiring partner's share of goodwill. Now retiring partner is to be packed off. Whatever he is eligible to receive, he should be given. So retiring partner should be credited, and the remaining partners or continuing partners capital account will be debited. Hence the journal entry for goodwill valuation, one and only method is there when goodwill of the firm is valued in the event of retirement, that is continuing partners capital account debited to retiring partners capital account. Now sometimes on retirement of a partner, continuing partners may decide to adjust their capital accounts on the basis of new profit sharing ratio by transferring excess or deficit to cash or current account. We will have to see how to solve problems, so keep it in mind. The accounts to be prepared remains the same, that is revaluation account, columnar capital account, cash account and balance sheet, but the only the procedure is also the same. The only difference is that revaluation profit or loss you will be transferring to all, including the retiring partner, because he was there in the firm till yesterday. Now in the case of columnar capital account, continuing partners capital accounts will be balanced towards the end, but retiring partner, there is no point in balancing his account because he is putting a full stop with for his affairs with the firm. So in his case, whatever is the balance figure, final figure, you will pay it either by way of cash or by transferring to his loan account. Okay. Now another thing you should know is about gaining ratio. There is only one method of valuing goodwill when goodwill of the firm is valued, wherein retiring partner's share of goodwill you will have to trace out, and you will have to pass the journal entry. Continuing partners capital account debited to retiring partners capital account. Why retiring partner is credited? Because retiring partner is to be given a send off with whatever things, with all the things he is eligible to receive, which includes his share of goodwill. So he is packing off, so he should be credited. So the credit should go to retiring partner, and who to bear it? Continuing partner. Hence the journal entry turns to be continuing partners capital account debited to retiring partner. Now continuing partners will have to do this in gaining ratio. Now the question naturally arises, what is gaining ratio? That is the mathematical difference between new ratio and old ratio. Okay, now we will see the problem part, numerical part. How is it possible? Okay students, first concept to be learnt is how to calculate gaining ratio. The question given us, the old profit sharing ratio among Rajendra, Satish and Tejpal were 2:2:1. The new profit sharing ratio after Satish, the middleman, retires is 3:2. Calculate the gaining ratio. Okay, so we will see how is it possible. Retirement of a partner. So we are moving on to the third lesson, the numerical side, retirement of a partner. I hope by this time you might have got the meaning of retirement. Now the question is, what is gaining ratio? The calculation of gaining ratio, calculation of sacrificing ratio, you may get as 2 marks question. It is largely seen as a 2 marks question in board question papers, especially the CBSE. Now gaining ratio is the mathematical difference between new ratio and old ratio. So when sacrificing ratio is important in the case of admission, gaining ratio is important in the case of retirement. So what is new ratio? New ratio is given in the question as 3:2. Now, who were the partners? Rajesh is to Satish is to Tejpal. Satish retires. Old ratio. How much is old ratio? 2:1. So, who will have gain? Gain will be there for R and for T, not for S, because S retires. So, what is 3/5 minus 2/5? That is new ratio minus old ratio is equal to gaining ratio. So what is new ratio? 3/5. Old ratio is 2/5 is equal to 1/5. In the case of T, what is his new ratio? 2/5 minus, this man is not there, okay, minus 1/5 is equal to 1/5. Therefore, gaining ratio is equal to 1:1. Okay. Now, we will see how to do full problems in retirement. Okay. We will see the next problem, that is full problems in retirement. R, S and M were carrying on business in partnership, sharing profits in the ratio of 3:2:1 respectively. On 31st March 2013, balance sheet of the firm stood as follows. Creditors 16,000. These three people's capital: building, debtors, stock, patents, bank. Okay. S retired. So the middleman retired on the above mentioned date on the following terms: building to be appreciated by 8,800 rupees. Provision for doubtful debts to be made at 5% on debtors. Goodwill of the firm to be valued at 9,000. Rupees 5,000 to be paid to the retiring man immediately, and the balance due to him to be treated as loan carrying interest at 6% per annum. Prepare the balance sheet of the reconstituted firm. Okay, so as we used to do earlier, you put tick marks nearer the items. Here buildings having adjustment, so nearer to building you put a tick mark. Nearer to building, provision for doubtful debt, nearer to debtors you put a tick mark. Now we will see how is it possible to prepare the different accounts, the full problems on retirement. Okay, so we will see how is it possible to prepare the different accounts on retirement, full problems. Okay, as usual we will have to prepare revaluation account. The laws or the rules remains the same for revaluation account in retirement, but the only thing you should be little alert while doing with revaluation profit or loss. Okay, particulars, amount. The next one is columnar capital account. Who all are they? R, S, M. R, S, M. Capital account. R, S, M. R, S, M. Date, particulars, date, particulars. Okay, the next one is cash account. particulars, amount, particulars, amount. And lastly, it is the balance sheet as we used to prepare earlier. That is liabilities, amount, assets, amount. Okay. Okay. So what was the principle we used to follow earlier? Items given inside the balance sheet, we will post it at the respective places. If it is an adjustment item, we will put it in the inner column, right? So we move on to the asset side, that is building. Building is having adjustment, so I am putting it in the inner column, building. Building is 23,000. Let it remain like that there. Now debtors is having adjustment, so debtors I am putting it in the inner column. How much? 7,000. Then stock is not having any adjustment, so I am putting it in the outer column. Then patents, no adjustments for patents, so I am putting it in the outer column. Now bank balance, take it as cash at bank, so asset, all assets have opening debit balance. To balance brought down, how much? 6,000. Then coming to the liability side, creditors is not having any adjustment, so put it in the outer column, 16,000. Now capital account balances are given by balance brought down, capital account balances. So as usual we will be doing, your initial steps are very much similar with admission, 12,500. So whatever is given inside the balance sheet, we have posted it at the appropriate place. Now coming to the adjustments, building to be appreciated by 8,800. We know that appreciation means increase in value. So add appreciation, add 8,800. So it will be 31,800. Now provision for doubtful debts to be made at 5% on debtors. So less provision for bad and doubtful debts. How much? 5% means 350, right? 7,000 into 5 by 100. So 350. So it will be 6,000. How much the value? 6,650. Now these two people should come in revaluation account by appreciation of building. How much? 8,800. Provision, we know that increase in liability, or increase in liability as usual, as we used to do earlier, should come here. 350. Then goodwill treatment we should know, the first problem, right? So learn it like this. Goodwill of the firm. Goodwill of the firm, how much? Goodwill of the firm is 9,000 rupees. Okay. So who is retiring? S share of goodwill. How much? 9,000 into 2 by 5, right? So how much is 3,600? S share of goodwill is 3,600, right? 9,000 into 2, it is not 2 by 5, it is 3:2:1, so 2 by 6. 9,000 into 2 by 6, because old ratio is 3:2:1. So gives you 3,000. Now what is the journal entry? Continuing partners should give it to retiring partner. Continuing partners capital account debited. അപ്പോൾ ആരൊക്കെയാ continuing? R's capital debited, T's capital debited, 2 retiring partners capital account. Retiring partners capital account. അപ്പോൾ ആരാണ്? Which means to S capital account. Sന് കൊടുക്കേണ്ടത് is 3000. How to give it bit by R and T? R and T will have to give it in gaining ratio. Now how will you trace out gaining ratio? What is gaining ratio? Gaining ratio is nothing other than new ratio minus old ratio. What is new ratio? New ratio, nothing else is mentioned, so we will have to hypothesize that 3:1. Old ratio is 3:2:1. Okay, so what is gain of first fellow R is new ratio 3/4 minus 3/6 is equal to 3/4 minus 3/6 is equal to 24. 18 minus 3 is equal to 12/24, and that of T will be new ratio 1/4 minus gaining ratio is nothing other than the difference between new ratio and old ratio. 1/4 minus 1/6, 24. 6 minus 4 is equal to 2/24 is equal to here 24, 6, it is 12 here, right? 18, 6, 18, 12, so it is 6/24. Here it will be 24. 6 minus 4 is equal to 2/24. So gaining ratio is equal to 6:2, that is 3:1. Okay, now what is to be done? 3:1 is the ratio. 3000 is to be divided in the ratio 3:1. 3/4 and 1/4. So it will be 2250 from the first man's pocket, 750 from the second man's second man's pocket, and should go to S totally 3000. Hence journal entry finally turns to be R's capital account debited 2250, T's capital account debited 750 to S capital account 3000. Okay, R's capital, T's capital to S capital. Now R is debited, T is debited. So what should you do? R's capital account, this is the debit side. You come to R's debit side, T's debit side, but in your capital account you cannot write your name. So what will you write? To S capital, how much? 2250, and here it will be 750. Okay, now credited to whom? Credited to S, right? Credited to S. So what to be done? What is to be done? Come to the credit side of S. This is the credit side of S. In your capital account you cannot write your name, so what will you do? By R's capital, how much? 2250 by T or M? RS and M, right? So by M's capital, who is retiring? Retiring man is S. Okay, so S by R's capital, by M's capital how much? 750. So creditors 3000. So this is how you will have to post. I repeat once again regarding goodwill. 9000 is the goodwill of the firm. So this man's share is 9000 into 2 by 6 because this man retired. So 3000. Now 3000 is to be given to the retiring man S between R and M. Okay, R and M will have to give it in gaining ratio. Now what is gaining ratio? New ratio minus old ratio. What is new ratio? 3:1. What is old ratio? 3:2:1. So what is gaining ratio in the case of R? 3 by 6. R new ratio is 3 by 4 minus 3 by 6, that is old ratio, turns to be 6 by 24. In the case of T, it is new ratio 1 by 4 minus 1 by 6, that is 6 minus 4 by 24, that is 2 by 24. So 6:2, that is 3:1. Now what is to be done? This retiring man should be given, so he is credited to S capital account, and who has to bear it? The continuing people, that is R's capital, R and it is M, not T. Okay, R's capital account debited, M's capital account debited to S. So how to do? How to post it? That is another element of confusion. R is debited, M is debited. Come to the debit side of R and M. This is the debit side, R and M. In your capital account, you cannot write your name, so you are writing to S. How much? 2250 and 750. Now credited to S. Okay, R's capital account, M's capital account debited to S capital account. So credited to S. So what is to be done? Credited to S by 3000. Come to the credit side of S. This is the credit side of S. Okay. Now you cannot write your name. So what will you do? By R by M, how much? 2250, 750. Now I think we posted everything at the respective place. Now we will see how is it possible. How will you close? Revaluation account. 8800 is the heavier total on both sides. So what is the difference? 8800 minus 350, that is 8450. So it ended up in revaluation profit. Now comes the difference between admission and retirement. Listen carefully. In retirement, whatever is made by the firm so far, is in that the retiring man S is also eligible to enjoy. So R, S, M, these three people should together enjoy 8450. So to R, to S and M, R's capital, S capital and M's capital. Okay, how 8450 in which ratio? That is 3 by 6 into 2 by 6 for this is for R, this is for S, and into 1 by 6 for M. Okay, so how? So 8450 into 3 divided by 6 equal to 4225. Okay, 4225 for the first man, 2817 for the second man, and 1408 for the third man. Now this will have impact in your this thing, capital account. It's revaluation profit. So you will be writing 4225, 2817 and 1408 for the third man. Now how to close this? That is the next step to be learned. Here take the case of R. The heavier total is on the credit side, so 24,225. Heavier total on both sides, 24,225. What is the difference? This man will have a balance because R is a continuing partner. What is the balance? 24,225 minus 2250, that is 21,975. You balance him 21,975. What about the last man, retiring man? We will do finally, that is 13,908. okay, that is the heavier total. So heavier total on both sides. So 13,908 minus 750. So the difference is 13,158. So now you see, these two people will have a balance. You bring it to the opposite side by balance brought down. How much? 21,975, and the last man 13,158. Now how to settle the retiring man? S is a retiring man. See his heavier total, 7,500 plus 2,250 plus 750 plus 2817 is equal to 13,317. So you checked his debit side, nothing is there on his debit side. So totally he is eligible to receive 13,317. Now what was the mode of settlement? How he was paid? He was paid like this: 5,000 immediately in cash and remaining 8,317 to his loan account, that is he was given in installment. Now regarding the retiring man, you will be writing to cash immediately 5,000. Now to S's loan account, how much? 8,317, and totally 13,317. This man was packed off, so there is no balance for the retiring man. Now this cash will have an impact in cash account. So what is the journal entry? S capital account debited to cash. Cash is credited. So what will you write? By S capital, how much? 5,000. Now what is the position of cash account? Heavier total on both sides, 6,000 by balance carried down 1,000 to balance brought down 1,000. Now this cash balance will come in balance sheet. How much? 1,000. Now there is another item, loan. This is a liability. Until and unless 8,317 is paid to S, it is a liability. So all liabilities should come on the liability side. S's loan account, how much? 8,317. Now these two people have a balance that is to be shown on the liability side, that is R's, you will be writing capital account, and M's capital account. Okay, that is R's capital account will be 21,975 and S capital account will be 13,158. 13,158. Now we posted everything at the respective places. Now we should see whether the balance sheet is tallying. Coming to the asset side, what is the picture? 31,800, that is 31,800 plus 6,650 plus 12,000 plus 8,000 plus 1,000, 59,450. Now we should see whether the same thing is happening on the liability side. 16,000 plus 8,317 plus 21,975 plus 13,158 gives you 59,450. So in retirement, the approach towards full problems remains the same, with the only exception that you will be transferring revaluation profit to all, including the retiring partner, because whatever is made by the firm till point of retirement is eligible to be enjoyed by the retiring man also. Hence revaluation profit is to be distributed amongst three. The students very often make mistakes, provided he or she is learning in the 11th hour or he or she is learning without proper conceptual clarity, so that the examiners know pretty well. So they may confuse you by giving a problem on admission and another problem on retirement. Okay, so in the case of retirement, profit is to be revaluation profit is to be distributed amongst all. Then the mode of operandi with regard to columnar capital account is also the same, with the exception that in the case of retiring man, you will not have a balance towards the fag end. He will be settled off either by way of cash in full or transferring to loan in full, or a combination of loan plus cash. Okay, now another point which is new is the regarding goodwill treatment. Goodwill treatment, you will have to see it like this. Goodwill of the firm, only one method is there, luckily no 4 methods or 3 methods. So goodwill of the firm is 9,000. Old ratio is 3:2:1. Now his share of goodwill is, from this you traced out 3,000. Now how to recollect, whom to give? And retiring man is going, he is waving goodbye, salam. So what he is to be given? Capital is a liability, so his capital account should be credited. Who is retiring? S is retiring, so he should be given a credit of 3,000. Who will have to bear it? The continuing people, R and T. How they will bear it? They will have to do it in gaining ratio. Now what is gaining ratio? New ratio minus old ratio. What is new ratio? 3:1. What is old ratio? 3:2:1. So how will you? In the case of R, gain is equal to 3/4 minus 3/6, that is 6/24. In the case of T, it is not T, it is M who is continuing. M, it is 1/4 minus 1/6, turns to be 2/24. Finally, gaining ratio is 3:1. So this 3,000 rupees which is to be given to S is to be borne between R and M in the ratio 3:1. Hence it is turning to be 2250 and 750. Another area of doubt is how to post it. Now in the columnar capital account, these people are debited, R and M. Come to the debit side of R and M. R and M, debit side. In your account you cannot write your name, so you are putting the other person who is credited, that is to S's capital account, in the respective column. S is credited. Come to the credit side of S. Credit side. Whom to credit? Your name you cannot write, so by R and by M he got the credit of 2250 and 750. You incorporated revaluation profit, you balanced continuing people, you settled retiring man. Now this cash payment made by you will have its repercussion or impact in your cash account. Now balance of cash account turns to be 1,000. This 1,000 is an asset that you recorded in balance sheet. Regarding the remaining loan, that is a liability for the firm until and unless it is paid in settle, so that S's loan should come in balance sheet, and R's capital account balance and M's capital account balance should also come in balance sheet. So the balance sheet finally tallies at 59,450. Okay, so students, so far we saw how to calculate gaining ratio, how to do simple problems without capital adjustments in the case of retirement of a partner. And finally we will have to see if a full problem is given in the event of retirement wherein capital adjustment is also asked from you. That also you should know. So I have selected another problem regarding capital adjustment. Now the story is like this. A balance sheet is given to you, A, B and C. Balance sheet, bills payable, creditors, reserve fund, land, debtors, bills receivable, stock, etc., etc. Now balance sheet, outside it is stated stock is to be depreciated, so put tick mark near stock. Factory building was appreciated, so put tick mark near factory building. Bad debt is having adjustment. Legal charges is a claim is there, so goodwill of the firm is given. Capital of the new firm to be fixed at 30,000. The continuing partners decided to keep their capitals in the new profit sharing ratio of 3:2. Work out the final balances in capital accounts of the firm and the amounts to be brought in and or withdrawn by A and C to make their capital proportionate to their new profit sharing ratio. So like the earlier case, here after incorporating everything you will have to do capital adjustment. Mind it, capital adjustment is to be done only for continuing partner. The person who is retiring, who is waving tata bye bye, no need to adjust his capital, but the continuing partner's capital account is to be adjusted. So this is the problem, and we will see how it can be solved. Okay, so we will see how is this possible. So I hope you might have put tick marks. As usual, the accounts to be prepared are revaluation account, debit side, credit side, particulars amount. Next is columnar capital account, date, particulars, better you draw it big, journal folio. 3 people are there, A, B and C. Okay, A, B and C. Now date, particulars, journal folio, A, B and C, A, B and C. Now comes cash account, and finally it is the balance sheet. Liabilities, amount, assets, amount. Okay, now as usual, whatever information is there inside the balance sheet, we should do it at the post it first. So land and building, from the asset side it is having an adjustment, so I am doing it in the inner column, 12,000. Then debtors, I am writing 10,500 again in the inner column. Then comes, because debtors is having adjustment, bills receivable, no adjustment, so I am doing it in the outer column, 7,000. Stock is having adjustment, so bills receivable, stock is 15,500. I am posting it in the inner column. Plant and machinery is not having any adjustment, so I am doing it in the outer column. Now cash at bank, opening cash balance. Okay, to balance brought down, that is 13,000. Then coming to the liability side, bills payable is not having any adjustment, so I am putting it 6,250. Creditors, it is 10,000. Then reserve fund, we have discussed it about it earlier. Reserve refers to accumulated profits or undistributed profits, you can meant for future programs or future needs. So whatever is the reserve so far should be enjoyed by A, B and C in their old ratio. Till yesterday the retiring man was also there. So 2,750 is to be divided in which ratio? That is, they share profits in proportion to their capital. Listen here. So old ratio is in capital ratio. Capital ratio, that is 20,000 is to 15,000 is to 15,000. From where did I get it? That is their capital ratio, which is 4 is to 3 is to 3. Okay. So who is retiring? The middleman is retiring. Okay. Now 2,750 is to be divided in the ratio 4 by 10, 3 by 10 and 3 by 10. 4 by 10, 3 by 10 and 3 by 10. So how much? 2,750 into 4 divided by 10 is equal to 1,100 for the first man. 2,750 into 3 divided by 10 is equal to 825 for the second man and 825 for the third person. Okay. That is how reserve fund is to be distributed. Now balances of capital accounts are given by balance brought down. How much? 20,000, 15,000, again 15,000 is given to you. Now so far we have posted everything given as inside the balance sheet. Now we move on to the adjustment items. We should see that it should come in two places. Stock was depreciated by 10%. So less depreciation. How much is the depreciation? 15,500 means 1,550. 1,550. So 15,500 minus 1,550, that is 13,950. 13,950. Now this depreciation should come in revaluation account, that is to depreciation of stock, that is 1,550. Factory building was appreciated by 12%. So add appreciation. It is appreciation. 12,000 into 12 by 100 gives you 1,440. So the value turns to be 13,440. Now this should come in revaluation account, that is by appreciation of building 1,440. Provision for doubtful debts to be created up to 5%. Up to 5%. Listen here. 10,500 minus already 500 is there. Now we should see what is 10,500 into 5 by 100. We checked it out. 5 5s are 25. 25, 5, 2, 500, so 525. That is 10,500 into 5 divided by 100 is 525. So 525 should be the current, the provision required. Already you have 500 with the firm, 500 provision is there. So 25 more is to be provided. Okay, so debtors less provision for bad and doubtful debts 525. So how much? 10,500 minus 525 is 9,975. But when we go to revaluation account, no need to provide this 525 again. Already you have 500 provision, so provision should increase by 25. All provisions are liabilities. Increase in liability on the debit side of revaluation account, but mind it, it is not 525, it is to provision for bad and doubtful debts. 525 is required. Already you have 500, so 25 only is to be shown. Okay, now so you posted it at 2 places. Now provision for legal charges, some cases there advocate's fees is not given, so what will you do? To provision for, it's a claim, right, for legal charges, how much? 265. It is a payment pending, so that is a liability. So provision for legal charges, how much? 265. Then comes our goodwill. So we will see goodwill treatment. Goodwill of the firm is 10,000. Now A is to B is to C, how much? 4 is to 3 is to 3. B is retiring, so B's goodwill is 10,000 into 3 by 10, that is 3,000, right? Now who is to be given 3,000? To B's capital account. B is going, B should get 3,000 credit. Who has to give it? A's capital account debited, C's capital account debited, to B this 3,000. Now what, in which ratio? Gaining ratio. So we will have to see what is gaining ratio. Okay, so gaining ratio. What is gaining ratio? Gaining ratio is nothing other than new ratio minus old ratio. Now what is new ratio? Towards the fag end of the question, it is stated new profit sharing ratio is 3:2. What is old ratio? 4:3:3. Now what is gain? This man retires. What is gain of A? That is gain of A is equal to 3 by 5 minus 4 by 10. Okay, 3 by 5 minus 4 by 10. 3 by 5 minus 4 by 10. That is 6 minus 4, that is 2 by 10. And in the case of A, B and C, it is 2 by 5 minus 3 by 10. This is the person. So 10 is the LCM. 4 minus 3 is equal to 1 by 10. Therefore, gaining ratio is equal to 2:1. Gaining ratio is equal to 2:1. Okay. Now, how will you incorporate this thing? 3,000 is to be done in the ratio 2:1. So 3,000 into 2 by 3 into 1 by 3. So turning to be 2,000 for the first man and 1,000 for the second man. So I repeat, gaining ratio, B's share 3000 should go to B. That is why B is credited. It is to be borne in by A and C by adjusting through their capital account, So A's capital account debited, C's capital account debited. Now how? This is to be done in gaining ratio. How did you compute gaining ratio? We saw 2:1 is the gaining ratio. Now how to post it? Here is A debited, C debited. So I am coming to the debit side of A and C. So this is the debit side of A and C. I will be writing to B's capital how much? 2000 for A and 1000 for C. Now it is credited with B. So which is the credit side of B? This is credit side of B. But in my account I cannot write my name. So by A's capital how much? I got 2000. From C's capital I here means B, got 1000. Okay. So this is how you will have to do goodwill. Now goodwill we posted at the respective places. It's double entry over both sides of capital accounts it came. Now they had asked you for capital adjustment. How to do capital adjustment? Before that you should do this revaluation. How much? Revaluation ended up in loss. So by revaluation loss, how much is the loss? 11440 is there on the credit side. You have more on the debit side, that is 1550 plus 25 plus 265. It's 1840 minus 1440 on the credit side. So 400 is your revaluation loss. Okay, revaluation loss of 400. Heavier total 1840 on both sides. Okay, now this is to be transferred to A, B and C. Which ratio? A, B and C in the ratio 4:3:3. 400. So 400 into 4/10 for the first person, 3/10 for the second person and 3/10 for the third person. So this turned to be 160, 120 and 120. So revaluation loss is to be transferred 160, 120 and 120 again. So totally 400. Now this revaluation loss should come in columnar capital account, that is to revaluation loss 160, 140, again 140. So we posted everything at the respective place. Now they wanted you to do capital adjustment. So how was it possible? Regarding the retiring man, how was the retiring man settled? Regarding the retiring man, you can transfer it to his loan account because sufficient cash needn't be there. So you transfer it to his loan account. So what is the retiring man? 17,000, 18,825 minus 140. 18,825 minus 140. 18,625 I think. 18,825. 18,825 minus 140 gives you 18,685. That is the amount payable to the retiring man, that is B. But sufficient cash is not there. You can see the cash balance, that is only 13,000 with the firm. So what to be done? 18,685. You can pay it in installment. That is why you write B's loan 18,685. Now this B's loan should come in the balance sheet because that is a liability pending, that is 18,685. 18,685. Now regarding the continuing people, you cannot do anything, but you will have to do capital adjustment. Now listen here, capital adjustment, they decided to fix capital at 30,000 to be done in the ratio, new ratio 3:2. So what happens? 30,000 is the new capital of the firm, should be the new capital of the firm. That's 3 by 5. That is 18,000 for A, and for C, how much? 30,000 2 by 5. That is 12,000. Okay. So coming to the capital account, to balance carried down, 18,000 for the first person and 12,000 for this man. That should only be the capital account balance. Whatever is excess or deficit, you adjust it through cash account. So you see the heavier side. Heavier side, here it is 20,160, here 21,100. So 21,100, heavier total on both sides. 21,100 minus 21,100 minus 20,160, that is 940 extra. You transfer it to cash account. How much? 940. Now here 15,825. This side is heavier, so heavier total on both sides. 15,825. Here also 15,825. What is the difference? You have 13,140. So 15,825 minus 13,140, that is 2,685. That is 15,825. 15,825 minus 13,140, that is 2,685 for the last man. Now this will have its impact in cash account. Cash account by A, by C, A's capital by C's capital, 940 and 2,685. So there will be a balance. How much? Heavier total on both sides. Heavier total 13,000 minus 13,000 minus 2,685 minus 940, that is 9,375 is the balance. Now this cash balance should come in the balance sheet on the asset side. Cash 9,375. So we try to incorporate everything given, including the adjustments. So let us see whether the balance sheet tallies. So 9,375 you incorporated. So 13,440 plus 9,975 plus 7,000 plus 13,950 plus 11,500 plus 9,375 gives you 65,240. 65,240. This side also likewise 6,250 plus 10,000 plus 265 plus 18,685 gives you, these two balances you didn't incorporate, that is A's capital balance and C's capital balance, that is 18,000 and 12,000, that is 18,000 and 12,000. 65,240. Okay, this is how we will have to solve. So the new area in this lesson we learnt is regarding capital adjustment, that I'll tell you. 30,000 was fixed. That's the new capital of the new firm after reconstitution, which is to be distributed in 3:2 ratio. So A should have only 18,000 and C should have only 12,000. So we fixed their balance as 18,000 and 12,000. Retiring man was packed off with whatever he is eligible to enjoy. Now what happens is, you put this as balance, so heavier total on both sides you incorporated. So the difference you transferred to cash account, that is extra was there, so cash account, which will have its impact in cash account. So balance is there 9375, then put it in cash account. That is how the balance sheet tallies. So this is all about retirement, and finally, to put it in a nutshell, we will see what all things happened. Okay, so before wrapping up the lesson, we will see what all things happened. We started with the next mode of reconstitution. The case I explained, the one of them expressed their desire to quit the firm because he is planning to go to Germany. So in this case of discontinuing decision, whatever he is eligible to receive so far, he will get it either by way of cash or by way of loan, which means it will be paid in installments. Sometimes a combination of both these things may be resorted to. Luckily, in this only one method of goodwill is there, that is goodwill of the firm is valued. In the case of retirement, you should know about gaining ratio, which is nothing other than the difference between new ratio and old ratio. Now goodwill valuation, only one method, that is when goodwill of the firm is valued. Find out retiring partner's share of goodwill from the goodwill of the firm given in the question. Pass the journal entry. Continuing partner's capital account debited to retiring partner's capital account, because retiring partner should get his credit and is to be borne by the continuing partner. Continuing partners will have to bear it in gaining ratio. Now sometimes they may also ask you to adjust capital account, like we saw in admission. Here the continuing people's capital accounts may be adjusted in new profit sharing ratio by transferring excess or deficit to cash or current account. Okay, thank you.
Logic, School of Management. It is simple logic.